Hey, good morning, guys. All right, so we're gonna look at these bottom two panes right here. All right, I got the Canadian dollar and Japanese yen on the 15-minute chart over here to your left, and then I got the U.S. dollar, Japanese yen over here to my right. And what I'm looking at today is arbitrage. All right, and so with this arbitrage, particular trading, I, well, it's not arbitrage in that sense of what we traditionally think of, and I'll explain that right quick. All right, so let's look at a definition of it. So arbitrage, basically is the trading that exploits the tiny differences in price between identical or similar assets in two or more markets. Now, a lot of people don't do arbitrage trading anymore because they think it's not any more opportunities in there, but yet there are. Now, I want us to look at this over here. So prior to this candle coming here and getting into this supply zone up here, there was a double top right here. All right, so a double top showed, and then this candle basically blast through and eliminated this particular double top. Now over here we have a double top as well too. But if you notice, is that the same pattern is shaping up over here on the right as the same pattern over here. And what I'm anticipating now is that this will fail as well too, and we will actually get back into this supply zone. And what happens sometimes is, even though a double top or a bottom will form, if you look above, there could be a supply and demand zone that's sitting there. And so what I'm doing, I went long, and I want to see if price can get in here. I want to trade it just like it's doing over here. So these are little arbitrage that I've found in the market, and I found it on a lot of different assets, from Bitcoin and oil, sometimes with USJPY and US Canadian dollar. So you see that. So I have a trade on right now, and I'm gonna see if we can get back up here into this area. Typically, if I would have saw this double top, I would have said, you know what, I'm just going to short it. I'm going to go short. But when you're doing your double tops and bottoms, you really need to look at the overall market structure, see what's going on, because it could be in an area where you really have a pivot point area above and you don't even realize. All right. So let's see how this thing works. We got this one over here is moving pretty good. So let's see if this can do this. All right. Now, like I said, arbitrage is a strategy. This is contrarian. So this is a contrarian strategy as well, too. All right. So I will get back with you. I'm gonna pause the video and I'll see if we can actually get up here and hit these targets, as you can see in real time. All right. So you see we're moving pretty good. We're getting up. We're anticipating the same that happened over here. All right. So let's see if we can really break and get above, in this area. I am in profit. Okay. So that's good. I can put a protect stop loss above, below here, protect for a scalp. And let's see what that level would be if I put it below here. Let's do this. 131.48. So I will push it a little bit to 131.319 to give it more breathing room. In there. And I'm not sure if I'm going to put that stop loss in yet. I might just leave it out and just do it as a manual. So sometimes I do that. Sometimes I do a real true hard stop. I'll go ahead and put it in there, and then sometimes I just go ahead and do a manual. So here we go, some manual, and sometimes you can just put your stop loss in the profit as well too. All right, so it took us a little longer than we expected. I had to pause the video, but you can clearly see. We was looking at this over here, and we was expecting to get the same with the U.S. dollar, Japanese yen, and we're finally got into this box zone. We did have a little bit of pullback. So remember, I was telling you, I'm going to put the stop loss on. It's going to let it be, flow a little bit. I'm glad I did that because this my stop loss would have got hit. I'm glad I just took it off. And we're in here. We're good. Uh, of course, if anybody had got back in this area to where we are now, that was a 47 pip move to get back up to that zone. I did go down to the 5-minute chart and added another position. And I'm going to show you what I saw. And I'm going to pull up my Fibonacci retracement tool so I can give you a glimpse. All right, so this is a impulse. And what I wanted to do was take my fibs there. And let's go on a bigger screen and stretch this out. And this is what you would see is that price came to the 50%. It's jumbled up. You can't see it. And we had what we call confluence. So what this means is that the 50% retracement level lined up where there was some recent market structure where this was some resistance pushed down. We broke it. We came back. We retested it. So this aligned with the 50%. So we want to take this trade. Now, typically people think, well, what if it go to 61 or all these other levels? We're not worried about these other levels because this was a key area of where it used to be resistance and now serving as support. Now, if these levels would have been violated, that would have been something different. But we saw some enough bullish pressure come in out of this area and push up to get here. So that was another entry for a second position. Overall, I'm satisfied with day. I made my gains. I'm pretty good. But once again, this is a style of arbitrage trading where, like I said, you can find different assets in the market that have these type of moves where one would move first and then the other one follow. All right. So hit the like button, subscribe. It's your boy E White, Dark Horse Investor. I am out.